If you want to own a nice, consistent company with a strong dividend and a management team that's newly committed to bringing out value by any means necessary, then why don't you take a look at Waste Management, WM for all you home gamers. This somewhat sleepy stock, which you know I've liked forever, is the largest waste disposal company in America. 269 landfills, 297 transfer stations, a nice recycling business. Plus, Waste Management sports a healthy dividend that currently yields 3.1%. That's much higher than the return you get from the benchmark 10-year Treasury at the moment. Now, Waste Management reported last Wednesday, and the company delivered some strong results. 4-cent earnings beat off a 68-cent basis on a higher than anticipated revenue base that nevertheless fell 0.5%. Management said they expect to exceed the high end of the free cash flow forecast for the full year. Plus, during the quarter, the company saw robust pricing. What really gets me excited about the story is the value creation element. 3 months ago, we learned that Waste Management will be selling its Wheelabrator waste-to-energy business, where they burn garbage to produce power, for $1.94 billion. At the same time, the company also announced a $600 million accelerated buyback, most of which has already been spent. If they can't find any strategic takeover targets, they'll likely use the proceeds from Wheelabrator to buy even more stock. Waste Management has given us a quick 7% return since we last spoke to the CEO at the end of July, and I think it could have more room to run, although this is the kind of stock that tends to rally slowly and steady. Hey, proverbial tortoise. Let's take a closer look with David Steiner, the president and CEO of Waste Management, find out more about the quarter and his company's prospects. Mr. Steiner, welcome back to Mad Money.
Hi, Jim. Always a pleasure to be here.
David, I got to tell you, this quarter seemed to be all about discipline and execution, and discipline and execution can produce some nice upside surprises, can't it?
Yeah, there's no doubt about that. And, you know, look, we've done a lot of work in the last 10 years to get the right team in place to drive that kind of execution. And you know, Jim, these things don't happen overnight. I'll tell you, I wish I'd done it faster, but we got the right team right now doing the right things, and that's a good spot to be in.
And one of the right things is to pass up on business, isn't it?
Yeah, well, you know, look, we think we should get our fair share of volumes, but we're always going to be a more price-dominated company than volume. You know, we always like to say that if you lower the price of trash, people don't create more trash. This is not like a consumer product where, you know, if you lower the price of flat-screen TVs, people buy more flat-screen TVs. They don't create more garbage, which means you're always going to be better off making sure that you can cover your inflation with price and then get your fair share of volumes. And that's what we plan to do at Waste Management.
Well, you know, when I saw the GDP number, and I knew you were going to be coming on the show, GDP pretty robust, I am still amazed that we're not back to where we were just in terms of trash creation in 2007.
Yeah.
What are the elements that would make it so we could return?
You know, Jim, it's really interesting. This last downturn, we really saw what drives Waste Management's business, and that is housing starts. You know, when you think about it, every time you build a house, you put a can out in front to build it. But then when you build 100 houses, you got to build a grocery store. You got to build a gas station. You got to build all the commercial businesses to support those houses. And then with new houses, obviously you have new residential customers. So we get sort of a 3-for-1 pop every time they build a new house. And what you've seen in the recovery is that it hasn't been a housing-led recovery. You know, I've always said that if we can get 3 successive years of 1 million-plus housing starts, that's when you'll really start to see the volumes come back for us. You know, this will be our 3rd year in 2015, so we expect to see that commercial business, those small businesses like dry cleaners and restaurants, that's when we really start to see those pick back up. And so we're thinking in 2015 we'll start to see our volumes improve.
Now, one of the things that you've taught us is that the urban areas really want you to use natural gas, and you've had a fabulous natural gas business. I just want you to opine on this because you've really been a pioneer. These lower gasoline prices are going to stop outfits other than yours from switching to natural gas, don't you think?
Yeah, no, I don't think there's any doubt about that. You know, the differential, even with lower oil prices, you still see the differential favoring natural gas. Our customers want natural gas, and so you know, we're going to continue to go down that road.
All right, now how about recycling, which I felt was a mixed picture from this quarter?
Yeah, boy, recycling, Jim, has been a mixed picture now for about 18 months. And, you know, it really is, I think, the untold story of what's going on in our industry. And that is that at the peak, we were investing anywhere from $100 million to $400 million a year in recycling assets. What you've seen is the first sustained low prices in commodities since I've been CEO, which means we're not investing in recycling. And we really need to work with our customers and work with governments to find out how do we incentivize folks to recycle where we can make money and continue to make investments. And so it really is something that I think we need to take a hard look at, both from a governmental point of view and from a customer point of view.
Well, David, recycling, not so great. We've got Wheelbrader going. Are you turning Waste Management into a smaller, smarter company? I mean, it's never been your footprint to get smaller, but you could argue that that is what's going on.
Well, you know, Jim, I got to tell you, we're not here to create an empire. We're here to create shareholder value. And if we can create shareholder value by being a smaller company, that's exactly what we'll do. Now, I do think that we can take the Wheelbrader proceeds and reinvest them into more stable, core type of businesses that will create additional shareholder value, that we can replace more than the Wheelbrader EBITDA by using the proceeds from the sale, because we have a very high tax basis, so no tax leakage there. So I think we can replace those businesses and get bigger. But look, if what it takes is to create shareholder value is to get smaller, that's what we'll do. But I don't think that's what we're going to need to do. I think we can continue to grow and continue to create shareholder value.
Well, you sure have done both so far. And thank you so much, David Steiner, President and CEO of Waste Management. Always good to see you, sir.
Thank you, Jim.
Consistent gains, good yield. This is what we live for in Cramerica. Waste Management keeps delivering that, and they're going to have a very good year in 2015. Stay with Cramer.